from the political standpoint, if one of the risks to crypto long term is a dramatic swing in the policy, I do think a market where crypto draws down substantially and Democrats focus on it is a potential scenario where there's risk. But again, I really don't think that's the base case. I think once we have regulation and crypto is in Wall Street and in portfolios broadly, I just don't think it goes back. I think we're in a new regulatory world. I think the ETF is a good example of that. Like, we can't not have an ETF. We have an ETF now. It's not going to disappear, and it's sort of a one-way door. And I think from a regulatory perspective, we're moving through those one-way doors. We moved through it on stablecoins. We're moving through it on market structure. I just think we're in a pretty strong place as an industry now.
And so I guess the last question I have on the institution side, or just the next question I have is, so do you think that part of it is just, you're saying that the education has become so pervasive amongst these institutions that essentially that's the factor that diffuses the 4-year cycle at this point?
Yeah, and just that they're slow moving. They don't move with the speed of retail investors who moved in and out of assets on a 4-year cycle. As soon as the market turned, they were out. That's just not the way institutions act. They're allocating for the next 10, 20 years. Maybe listeners who have a retirement account from their job, it's not something they think about. They just invest in it every 2 weeks without even imagining what they're doing. That's sort of the way it happens in this space. So once you've made it into the club, once you're part of the portfolio settings, the market could be up or down. They're still going to be buying, and they just move at a different pace. It's like a different kind of investor. So I think that's going to play out for a decade. I think, ETF flows as an example. We did $35 billion in year one. I think we'll do $50 billion in year two. I think we could do $75 billion in year three. I think we could do more than that in year four. That's what ETFs tend to do. Flows tend to increase over time. And I think that's what we're going to see from institutions. I just think they're moving into crypto, and I think that's going to take multiple years, and that's going to overwhelm the sort of 4-year cyclicality aspect.
Yeah, I think you're seeing a number of things that just paint to this idea that it's going to be a long cycle, right? You have the ETF, even if we do have some cyclicality, there's some resemblance. It's going to be long. You have the ETF launch. We've been above all-time highs since February of 2024. With the kind of, Bitcoin treasury companies that are coming online, and thinking that maybe a Jack Mallers or Adam Back may be delayed from buying a lot of Bitcoin until 2026. So I'm very conscious of those factors, but, old habits die hard, and I'm really, because I just, to go into the story well, I remember sitting at a breakfast with Barry Silbert in 2019, and he was of your opinion. He said the 4-year cycle is dead. He said and I said, how? We're going to have the halving. This is going to happen all over again. And he said, well, everybody knows about the halving. And I said, do they know about the halving? I was like, they might know something about Bitcoin, but they don't know what it means. But I thought it was interesting then. It's like, there's this idea, the longer you get in the space, right, you kind of think that everybody knows, right? Everybody has priced it in, right? Barry, one of the great businessmen of our space, fallen on, a little bit of hard times recently, but, built very great companies. But I think that the trap that maybe he fell in that instance was just sort of thinking that, just assuming that everybody, just because about Bitcoin, you really know what it means for Bitcoin to be so scarce, right? Because even in our own, lives, I think back to myself now, seeing Bitcoin progress in price, I wish I worked harder 4 years ago. I felt like I worked as hard as I could have, right? But now I'm almost like, okay, what was I doing, right? Why wasn't I should have been, kind of selling everything that I couldn't and really kind of grogging, right? So it's like, how do you price in that, right? Because maybe, I don't know, you speak to your own experiences here, but in my life, I feel like I only just understand more deeply how scarce Bitcoin is, like, over time. And I don't know how to tell people that, because I can tell them that colloquially, but then to actually get it to, like, dictate their actions and make an impact, it's a second order effect, I think.
It is definitely, it's definitely challenging. We do a lot about talking about that absolute supply versus the absolute demand, which you can measure. ETFs and companies are buying 5-6x all the new supply. We talk about the relative scarcity of Bitcoin versus gold. gold inflates at 2 to 3 times the pace of Bitcoin today, and that will probably increase. And Bitcoin is shrinking. Um, so I agree. The longer you dwell on it, it's hard to grok. I think my answer to the this time it's different
I
problem.
mean, I agree. I'm not hitting you with any numbers here. This is just
No,
raw.
no, no.
You
I'm with you. I think when you say this time is different, which is sort of what I'm saying, you have to say why. And I think what separates this moment from the last cycle and the cycle before and the cycle before that is we have two whys. The whys are institutions are allocating, they control most of the money in the world, and they move slower than retail. And then the whys are, for the last 6 months, we've been on a new regulatory journey that opens up the market in enormous ways. And if you go back to the last cycle, what was the why? We have DeFi. Like, that's not as powerful a why as the largest investors in the world are now allocating to crypto in size to the tune of like $40 billion a year in ETFs. Or we now have crypto regulation that lets Wall Street interact with crypto. Those are much bigger whys than we have DeFi, or we had ICOs and Ethereum, which was like the last cycle why.
a very retail driven cycle. Yeah.
Yeah. The first cycle was people can buy Bitcoin. That was a big thing. But that we just learned, and then we had the 4-year cycle after Mt. Gox blew up. But the last two, there wasn't a reason to expect it's different. I do think this time there are those two reasons, which institutional purchases and regulation. And I just think those are very big factors.